We finally received the dovishness that we've been looking for from Mr. Jerome Powell, Fed Chair, about the upcoming changes to federal monetary policy. What does that mean to you guys, right? That means that we should see here starting in September, mid-September, we have our next Fed meeting where we are predicted to see anywhere from 25 to 50 basis points, and then another Fed meeting in November and December. And with today's guidance and just forward-looking speech from Mr. Jerome Powell as far as what to expect with monetary policy, it's looking like we're finally out of the woods with a tighter, restrictive economy. Okay, so that means we should start seeing these Fed rate cuts coming. The 5.5% Fed funds rate that we currently have finally cooling, finally decreasing, and making everything in our lives as far as borrowing power more affordable, right? Whether that means mortgages, right, which are not tied directly to Fed monetary policy because we follow the 10-year Treasury note, but it does affect, everything. More so, of course, your home auto loans, credit cards, everything that has to do with monetary policy is going to be tied to this in some degree. So finally, we're here. It looks like, again, remember, they're not talking about quantitative easing just yet, which is something entirely different, right? We're still in a quantitative tightening policy. But as far as short-term Fed funds rate, okay, they're finally in a range where they're comfortable with inflation, and we're going to start seeing some relief. Now, in the mortgage world, we're always like a quarter ahead, generally speaking, with monetary policy, okay? So a lot of this, what we're going to see in September as far as Fed funds rates being decreased, whether that's 25 or 50 basis points, has for the most part already been baked into rate sheets across all lenders. Can we see a little bit more improvement through September? Of course. Could we see a deterioration in the market? Of course. Every day there are some minor changes that will happen to the market, but we already have forward-looking guidance to September, right? We're all anticipating at least a minimum 25 basis points, up to 50 basis points decrease, and a lot of that has already been baked into rate sheets. Why do I bring that up at the very tail end of this video? Is because if you ever have heard the saying, right, once the general public hears and starts making the move, it's already too late, right? Get ahead of it, right? Try to get out there with an actual pre-approval in hand, whether you're looking to buy a house or if you're looking to refinance a house, an FHA or VA homeowner currently in this market. Make sure you touch base with a local mortgage expert and ask them how this directly affects your current scenario and situation.